All right, here we are with another episode of the Caffeinated Contractor. And actually, this is episode number 14, which is pretty exciting. I just realized that this morning. I'm like, wow, 14 episodes in. That's cool. I like that. One of the things that I was doing recently, doing some research on SEO, was that a common keyword that is searched is my home remodel tax deductible? And I think that's a really good question. The thing is, I'm not qualified at all to answer that question. I don't know anything about taxes. So I wanted to bring someone on the show who actually knows something about taxes. And so I've met my friend Austin Long at one of our BNI meetings. And I said, well, you know what, Austin, how about we get on the podcast? We talk a little bit about taxes, which is probably something very exciting and a great topic that people love to talk about. But I know they have a lot of questions. So I thought I'd bring him on and he can help us through this. So Austin, welcome to the show.
Thank you. Yeah, usually people are excited to pay less tax for the most part.
Exactly. So, Austin, I know you do taxes. You're doing mine. You're doing our company's taxes as well. Your company is Taxation Representation, which I think was a pretty cool name. I mean, as soon as I heard that name, I'm like, that's my guy right there. So tell us a little bit about you, your journey to doing taxes, and what made you come up with the name Taxation Representation?
Yeah, sure. I mean, since I was a kid, loved money. Who doesn't? But really, personal finance. Went to school for business management. It's pretty broad. Did my toes in accounting. Hated QuickBooks, as many people do. But really liked entrepreneurship and how to start a business, how to grow a business. Really focused in that. And my first real job, actual part of a career, was at a small tax firm in the Champions Forest area, and I didn't know what I was doing, but they had me in front of fully armed police officers doing their taxes, and a little intimidating, but those guys, they're looking to save tax just like the rest of us, and just focusing on contractors, small business owners. That was something I really enjoyed doing, and started my own firm, and my focus is with that same thing, as well as just a lot of us small business owners that are not caught up on taxes, haven't been filing, maybe need to negotiate with the IRS. And so I say taxation without representation is tyranny.
Yes, exactly. So I love that. I love that. I remember you subbed for Gary, I think, at the BNI
a few times.
And I heard that name. I'm like, oh, man, I love that. Welcome to Texas, right?
Yeah, no, and the reason I came up with that is I had no idea what business name to start, but I asked my wife and sister for two different people, by the way, for some suggestions. But they had some pretty good ideas there, so I can't take all the credit.
That's awesome. Love it. All right. So you're the first tax person or money person to be on the show. Typically, you talk to other contractors or interior designers and things like that. Just for people who are doing research on the remodeling project they're about to come upon, and they come here for a source of education and guidance. Yeah. But I think this is a great topic because a lot of people are wondering, hey, I saw it on Google. That's a highly sought after keyword. Is it deductible? So I know your answer is probably it depends. Right. But let's start with just the regular homeowner who's doing research and they want to remodel their kitchen. Straight up, is their kitchen remodel tax deductible?
Yeah, in some ways definitely could be. So, one thing I like to think of is how are you paying for it? Are you taking out a home equity line of credit? This would be something that, you've got a mortgage on your home, you take out some maybe $30,000, $40,000 that has interest on it. If you're using it to improve your primary residence, then that's more interest that you could potentially use to save you money. That's just on the financing side, so that is one thing people look at. Taking that money out doesn't cost you anything in taxes. So it's always something people are worried about. Cash out, refi, stuff like that is very different. But, there's an opportunity there if you're already looking at loan options. If, it doesn't really maybe apply to a kitchen, but anything that's energy efficient, could be appliances that may qualify, solar panels being a popular one, but there are tax credits for energy efficiency. Not always huge, but, say $500 or so can definitely help out.
So like, say they have old windows in their house and they want to replace all their windows, that might be something that they could actually take advantage of.
Yeah, typically I look at, roof, windows, things that make the house run. A lot of times those are items that can help. And just, it's not super common. I would say most of the time contractors are buying the supplies, you're paying a contractor. Sales tax is something that can help, the average person itemize. We're paying extra sales tax. I'm not somebody that holds on to receipts. I don't care about my grocery bill receipts, sales tax and all that. Little stuff, not a big deal. I always tell people keep track of the big things over $3,000, especially if you're buying granite, you're buying all these things. These are sales tax that you could deduct. So pieces of a lot of this stuff, even for the average person, that you'd want to keep track of.
It's interesting because I know, we would, contractors, like you said, buy the material, and typically material and labor go together on the same line item. Typically. So it'd be hard for the homeowner to know what is the material, what's the sales tax, things like that.
I feel like the contractors typically just take any benefit they can in that situation. There's not, it's like, oh, well, here's my invoice that has no sales tax on it. So, okay, well, there's really nothing for us to get there.
If someone is doing this is education for me as a contractor too, because, that's standard. You don't typically separate material and labor unless there's some contractual, requirement with a government agency or something like that.
Yeah.
But if someone is wanting to do windows, let's just say, hey, I'm trying to get some tax credit here. I need to know, the cost of the material and the sales tax. Can you please break it up so I can have that? Is that an option, or would they have to pay for the material themselves directly from the manufacturer?
Yeah, I mean, it's really tricky. I would just say that there is a right way to do sales tax and a wrong way. And that's kind of out of my specialty because that's what the Texas Comptroller. A big misconception is just that, hey, I'm a contractor, any labor I do, I don't have to charge the customer sales tax, and I don't have to pay that sales tax to the state of Texas. That could be true very often, but one thing I've seen for like interior designers, for example, if you're just doing labor, interior design services, you don't have to collect any kind of sales tax. You don't have to, remit that to the state of Texas. But if you are doing labor and you've got all these materials and curtains and things you've purchased for the client, you've paid sales tax, but you also have to collect sales tax from the client and then, send that to the state. So it's very, industry specific. And there are companies that are experts in sales tax, but, for me, I just try and let my clients know it might be taxable, and there's a right way and a wrong way to do every different type of contracting, basically.
Yeah.
So good things to be aware of, at least.
Yeah. Sales tax is, that's just one of those things we operate in multiple states. So, in the other state we operate in, there's a different sales tax, rule. And I tell you what, make a mistake and the state will let you know about it.
That's the thing.
Yeah.
You're probably good if you're not getting any letters, but when you get that letter, I've seen people say, oh yeah, I didn't know I had to pay sales tax. Well, the state thinks you have to pay $100,000 in sales tax, which you've not collected. So that's not a situation you want to end up in.
Yeah. All right, cool. Well, we won't go down that hole because, that
call me if you have those problems for sure, but let's try to avoid those.
Exactly. All right, excellent. So the home remodel tax deductible thing, depending on the loan product and the type of material, a type of project. What if it's just a simple, kitchen cabinets, countertops, cosmetic? I want to make it look nice and updated.
Mm-hmm. Yeah, if it were me and I'm doing my taxes and I'm shelling out $10,000 for, for that project,
Mm-hmm.
I would say, hey, I've got the money ready to go. I'm going to pay for it. Great. There's probably, I don't itemize standard deductions like $28,000. Most married couples don't itemize. Mm-hmm. I'd say there's really not much, but I would want to know what that cost was, save it. At the end of the day, what you're doing is you are adding value to your home. I paid $250,000 for my home several, 4 or 5 years ago. I've done X, Y, and Z. I put in, $50,000. And so the question should always be, well, what is going to happen with the home down the road? Is this home going to be a rental property at some point? Is this home going to be sold? If you're going to keep it forever, great. This is probably irrelevant information.
Okay.
But I'd love to, rent out my home at some point. And that $10,000 cabinet purchase is going to be something that I get a tax benefit for when I have rental income in the future.
Okay, so you got to wait until you actually execute that plan of being a rental before you can actually take advantage of that.
Yeah, I mean, it's the IRS. They're looking at income. If there's no income on your primary residence, there's not a whole lot you can do. I own a business, contractors, same idea. Mm-hmm. I'm in my room, I'm in my office. I don't write off my entire bedroom as a home office. Don't do that. But, it is something that if I'm making improvements, this $10,000 improvement to my home office, and it were exclusive for business, then hey, that's something that I'd want to include in some form on my tax return. So a home office deduction for a business owner or contractor, that would be another place you get to use this.
That's a good point, because let's say you don't have a business, but you have a virtual job? Mm-hmm. Is that a different scenario, or can you still take advantage?
I mean, it used to be something back in 2017 before some major Tax Cuts Jobs Act, before some major changes. W-2 employees had maybe some home office, some mileage, some things like that. That's all pretty much gone. When I mention a $28,000 standard deduction, I kind of just explain it to people like it's all covered. There's on the personal side, a lot of times there's very few things we can do. Some single people are more, single, you own a home, maybe there's some more you can do, but employee expenses doesn't really matter. Hopefully your employer will cover it, because otherwise, there's no tax benefit.
Got it. Okay, that makes sense. All right, so let's since we're talking about income, let's go ahead and switch over to the investor side. Obviously, That's going to be a completely different story, because being an investor, it's a business. You're making money or losing money. So, yes. Same scenario. What's that? Yeah, sometimes both, right?
Yeah, you make money on paper. On tax returns, you lose it. So.
Yeah, exactly.
Good situation.
In the same scenario, they want cabinets. They redo their kitchen for whatever reason, increase the value of their home to get more rent, or maybe their prior tenant screwed it up and they have to redo it.
Yeah.
Scenarios like that. Tax deductible. I think I know the answer, but I'll defer to you.
Yeah, I mean, if it's a single family home, it's rented out throughout the year. You don't use it for personal use. It's just very like a common type of rental. Then in that case, okay, is $10,000 something that's installed, like cabinets, as opposed to, I don't know, something that sits on the counter. Yeah. Something that's installed improves the value of the home. Generally, the term is depreciation. We're taking it over a few years, 3 to 5 a lot of the time. Mm-hmm. So you spend $10,000. we get to write off, $2,000 this year.
Gotcha.
Not always the case, but that's kind of the idea. So get a little break each year.
I wasn't really thinking about this up until right this moment. I know that there's these cost segregation stuff that I don't really know much about.
Yeah.
So I don't know if that's something that you're familiar with. I'm sure you are, but I mean, is that a strategy that is good where someone could take advantage of tax benefits quicker than your average, without it?
Yeah. So, I mean, I see that as like it is kind of a financial advising role. I'm connected with a really great, he's like the 1031 expert, so it's the overall strategy is never pay taxes on your on your rental income on your properties. So the main idea is, and there's lots of different strategies, but if you want to spend a bunch of money on real estate, hundreds of thousands of dollars, doesn't really matter if there's a loan or not, it comes into play, but the IRS cares about what does it cost. And
Right.
and a lot of times you just take everything over about 30 years. Again, we're not dealing with perfect numbers, but a long time. You get a small benefit each year. So
Okay.
what investors want to do to take more now is a cost segregation study. They're going to say, okay, well, we are going to have appraisers actually go piece by piece and say, well, we don't need to take this one over 30 years. We can do it over 5 years. We can take this chunk over 10 years. We can do all these different things to get more benefit, up front. All kinds of special depreciation tax rules and things like that. And then, you go to sell the home, all this benefit that we're talking about taking early on, you sell it, well, it gets added into the gain later on. The 1031 exchange is basically, I'm selling this one, but I'm putting it into a similar property. I don't have to pay tax now. Maybe on that next sale I will, or I'll just keep doing the 1031 over and over. Bunch of hoops to jump through. You really want someone that does 1031s for a living. Wouldn't be me. I can report it, but it's like an actual kind of hand-holding role.
Right.
Very involved.
And for clarity, and I say this only because it wasn't that long, I don't know, a couple of years ago, where when I heard 1031, I didn't think it was just for investors. I thought it was for regular homeowners too. And it's funny, my wife got mad at me. She goes, "Don't you listen to anything I say?" Because she's in real estate. So 1031 is strictly for investors. It's not for regular homeowners. Is that correct?
Yeah, I mean, I wouldn't see a purpose for regular homeowners. So this is my primary residence.
Mm-hmm.
I choose to sell it. I'm married, so as long as I profited, gained less than $500,000 over the course of this few years, then I have no tax. So really great benefits for primary residents, and sort of the opposite is true for investors. So they really want to, I would just say plan ahead. You don't decide, hey, I sold my rental home last year. Now I've got all this money. I'm going to put in a new home. Let me 1031 it. No, you have to think about this before the sale for sure. That's where a lot of people get tripped up. Hey, Austin, I sold a home. Can I do a 1031? Well, no. I mean, you already sold the home, so.
Yeah. Yeah, I guess now that you explain it that way, it doesn't make sense because of the capital gains benefit. So for those who don't know, and I say this because at one point I did not know, how do I say this? What is the capital gains? I don't know, what do you call it? The exemption that homeowners can take advantage of. I know there's a difference between a single and married couple. There's amounts, time frame, and things like that.
Yeah, I mean, if we're just talking about your, primary residence, my home, where I live, generally you've been there for a few years, haven't rented out, it's just where I live, then it's like, okay, we made some money, but $250,000 is the exclusion for individual, $500,000 for married. So, I mean, very rare that someone would come out with more gain after all the closing costs and the exemptions and all this stuff. So,
Right.
pretty large.
And they wouldn't pay taxes on that.
No, not, most of the time, I don't know that I've ever had someone sell their primary residence and pay tax on it. Only if they're like renting it out or have some business purpose to it.
Sure. So isn't there like a two-year rule or something for that? Mm-hmm. You have to live in it for 2 years in order to take advantage of that.
Right. So that's true. I mean, that's where I have seen, some gain. You bought it, sold it a year later, somehow made a bunch of money. But yeah, there's, partial exclusions. There's this exception. I always joke, I mean, for every rule that the IRS has, they have an exception to that rule, and for every exception they have an exception to that exception. And so it's, it's understandably confusing because it's just kind of gibberish sometimes.
Yeah. I haven't even tried looking at it. I just hired people like you.
Yep, fair enough.
Yeah. So, all right. So somebody's got a house. They sell it. They lived in it for 3 years. They sell it. They make $200,000. They don't have to worry about paying taxes because of the capital gains. What do you call it? Exclusion? Is that what it's called? Yeah.
They meet all the rules. Then you get a great big exclusion. Still probably want to report it on your tax return, especially if there's a tax form, but there's probably nothing to pay. Just information.
And so that is the scenario of that had been your primary residence. Flip the scenario, a real estate investor had a property for 3 years. They sell it, they make $200,000. They will pay taxes on that unless they go 1031 and roll it into a new property.
Yeah, so, there could be a gain, there could be a loss. Ideally, there's a gain. And so if you decide, so that's kind of the way I would look at it. It's the 1031 exchange going through this advisor, it's going to cost, maybe thousands of dollars to do that. What is the actual tax that I can just pay now to, realize this gain?
Right.
And gains, super complicated. Sometimes they're just taxed at ordinary income. The long term is, generally the better way. You've had this home for over a year. You get long-term rates. It just means it's lower. And for a lot of people that are either self-employed, low earners, or just investors, they don't have this big W-2, you could get 0% long-term capital gains, even up to 80, 90,000 if you're married. It's like a lot to strategize on for sure.
Yeah.
What are my options?
It's certainly a lot of different conversations you need to have with someone.
Yeah. Well, and even on the personal side, I know we said there's no tax, but, you're paying a lot of interest, you're paying a lot of taxes, you buy and sell a home in the same year, that could be something that, now we actually can itemize and get this big benefit even without being an investor, being a business owner. That's definitely something I like to look at with people.
Yeah. Okay. Goodness, there's a lot there. So, all right. I want to hit on the homeowners again, because I think primarily majority of the people watching this, listening to this are homeowners rather than investors.
Sure.
But somebody, they're living in their house for over 2 years. And let's just say they want to do a kitchen remodel. It's going to cost about $30,000. And, typically, if you looked at the research, you could get a return on investment if you do a remodel in a kitchen or a bathroom or whatever. It could be $30,000 job could add, I don't know, $50K or something too. I'm just throwing out numbers here.
I was talking with my wife about that. She mentioned a pool, and I've heard that's not really a good way to get a return on your investment. But
pools, I heard that's not. But obviously, I don't know for sure. But pools is not. Yeah,
cabinets or something like you're talking about, if done right, could definitely help out a lot.
Sure, yeah, especially like if you have like an outdated kitchen. Maybe you lived in your house for a long time, and it was last updated in the 90s, and you update it to a more modern look. It's fresh. You spend $30,000, you put it on the market, you're going to get more money. You're going to
Yeah.
get more than likely you're going to get more than $30,000 back, right?
That's how people who flip homes do it. You're right.
Yeah, exactly. And as a primary residence, if you do that, I'm trying to throw this scenario out here, but it doesn't make sense in my mind right now. The extra $20,000 they make on that from the return on investment, it would not be quote unquote taxable because it's their primary residence and they lived there for over 2 years. Does that make sense?
I mean, there's a good chance that, that $20,000 they put in, whether they put it in or not, doesn't matter. It's worth tracking because, maybe they did buy before COVID and prices shot up after COVID.
Mm-hmm.
Single person, we're actually going to realize a gain of like $300,000, and the exclusion only cuts out $250,000 of it. Or we only lived in this home for a year, now we're selling it, we only qualify for half of the exclusion. We need that extra, money we put into the home. So that, $20,000 you put in, that does reduce the taxable gain by that amount. So
got it. Okay.
Worth tracking one way or another. Maybe it helps, maybe it doesn't, but it can't hurt.
That makes sense. Okay.
Mm-hmm.
Okay. I understand that, I think.
Sure.
So the biggest thing I'm getting out of this conversation is if you're researching in Google, is my kitchen remodel tax deductible, bathroom, home remodel, whatever, it's not an easy answer.
Situational.
It's situational, right? And I guess what I would say is don't go asking a contractor this question because they don't know. And if you're dealing with a contractor who's got an ego problem, who feels like they know everything, be careful. That you should not be talking. You should be talking to someone like Austin, get a one-on-one with him or someone in his industry just to throw out your scenario so that way you can get some good guidance on it.
Yeah, you got to be careful because can I write this off on my tax return? Well, yeah, I'll write off my $30,000 of my mortgage, and now I got a $30,000 business loss. Well, great, I get a great big refund, but I get audited a few years later. The IRS comes back and adds penalties and interest. That tax preparer you hired to do it, they already took their $3,000, and you can't ever find them again. Mm-hmm. It's actually really common. It's kind of an extreme example, but can you do it? Yeah, sure, you could do it. Is it legal to do it? Probably, if you're using someone that knows the law, that would help.
Yeah. Jeez. Just be careful, I guess.
Yeah.
And make sure you get some good advice before you do anything like that. And don't take Google's word for it either. Talk
Especially
to somebody.
on TikTok. Yeah. They're bad.
Yeah, exactly.
They're bad about that.
Yeah. Well, awesome. I don't know enough to really ask more questions. I just know that a lot of people are asking this question, and I don't know the answer. So, but like I was saying, I think the best answer to that question is talk to somebody about your scenario, because Google's not going to have the answer. Contractor's not going to have the answer for you either.
Yeah. Unless they're doing your tax return, you got to see the numbers.
Yeah, and I would probably think that you would, in the case like that, you would probably want to have that client talk to you prior to tax season, right? Just to kind of strategize.
Yeah, I always try and get with clients, end of the year, before the year's done. Once, 2023 is behind us, I can report it to the best of my ability, but I cannot, add anything that didn't happen. So always before the end of the year is a good time to plan. Excellent.
Okay. Well, cool, Austin. I appreciate your time. I know it's tax season and you're spending your time with us, so I really appreciate that. If somebody is watching this because they have this question or any other tax-related question, I know you're in the Houston area, but can they reach out to you? Are you open to take on people who are in other areas of the country?
Yeah, so I run a virtual firm. I'm an enrolled agent, so I'm not stuck to one state. This is a federal license. So whether it's just do my taxes or save me from IRS debt, I can work, across the country. Got out of country folks too. So just, Anything
okay.
IRS and income tax. I'm happy to help.
Okay. Excellent. And you do consultations. How's that work?
Yeah, I mean, I generally just see what people need. We can schedule a consultation, say, okay, let's look at your last year's return. What are your questions? Just have a conversation like this for an hour or so. And I always
Okay.
like to follow up with an email, just to make sure we're all on the same page.
Excellent. And then, a few things that we touched on were like sales tax, cost segregation, maybe things that you don't really specialize in, but you have a good network of people that you can refer out to, right? So if people have questions in those areas, they can reach to you as well.
Yeah, absolutely. So a lot of CPAs like to do it all. Me, I'm not a CPA. I know very specifically what I like and what I don't like. And so I've found great people that do everything else. So
Excellent.
have
Yeah.
good experience.
That's my business model too. I don't want to be everything. I can't. It's too
Jack of all
stressful.
trades, master of none. But
Exactly. Exactly.
works for some people.
Yeah. Yeah. It works for some people, I guess. If they want to get in touch with you, how do they do that?
So, I mean, I'm always open to phone calls. So don't know how you want to share that information, but
However you want.
Yeah, I mean, my cell is the 832-981-0617.
That's the one I have.
Yeah, so that's what you've got. That's definitely
Okay.
something that doesn't get answered too frequently during tax season.
Sure. Yeah.
But always, my email address as well is a good way to just, put a feeler out there and let you
Okay.
know how I can help. That one's a little
And I've
longer.
got both of those. So, I mean, if you want, I can put those on the YouTube description if you're open to that, just if people want to contact you for this. Is that cool? Or
Yeah, that'd be great.
okay, we'll go ahead and do that. So I'll put your phone number and your email address in there as well. Are you on social media at all?
I am. So
Yeah.
got my business page, Google business page, all the things
Okay.
a small business owner needs to get their name out there. But
Yeah.
other than that, I don't do TikTok or Instagram or anything.
You don't go dancing
I
around.
don't do
on
any
TikTok.
dances yet. I'll have to hire someone to figure that one out.
Yeah. So like Instagram's what, taxation representation? Is that
So
your handle?
Facebook, I think, is at tax rep or whatever the first symbol is. That'd probably be the best way to get a hold of me. But,
On Facebook? Okay.
yeah.
All right, cool.
Yeah, luckily there's not too many businesses with my name on it, so you can definitely definitely search it. It's long enough that most people don't want to make that their business name.
Yeah. It's like ours. It's and when I give up my email address to people, it's Christopher@elevationconstructionteam.com. I'm like, that is the longest email address ever. So I totally get it. Totally get it. Well, thanks a lot, Austin. I appreciate your time. And anything else you'd like to share or discuss before we close?
No, I mean, just don't play games with the IRS. Be honest. Keep good records. Should be good.
Excellent. Well, sweet. Thanks again for your time. And for those of you who are researching this tax stuff, share this with your friends because they're probably researching the same thing. I think this is great information. And give out Austin's information too. He can help out as many people as he has time for. So I'm sure he's open to helping you guys out. So thanks again. Subscribe, share, and all that good stuff. We'll talk to you on the next one.
Thanks, Chris.
All right, hold on.